Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com talks about the recent pop in gold and how the major markets are doing. Publisher of the realestatetiming.com newsletter, Robert Campbell, discusses the U.S. dollar, trade with China, and whether credit is tightening up. Noted West Vancouver real estate agent Allan Angell tells us about the collapse of the luxury housing market. Is this the worst he's ever seen? Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Naturally Splendid CEO Douglas Mason. We'll talk to Ross Clark right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to This Week in Money, Ross.
Good to be with you, Jim.
Ross, gold over the $1,300 U.S. mark. Is that a good move?
It is a good move, and, it's the first time it's managed to close up over 1,300 in the better part of, since last summer. So, we saw a nice move off the bottom. If you look at the summer lows, had that good hard rally from December into January, took us up to and sort of kissing the 1,300 level, and got way overbought. All the oscillators, things that we would look at, generated sell signals January the 2nd and the next 2 days. So a pause was the best thing to have happen. And what we had here, if you look at the gold or the silver, which had also done the same type of signals, overbought, this pause has just been perfect. We got down and we got some very short-term oversold signals, and you love to see those after the first move off a bottom, because that becomes one of your lowest risk entry points. You buy the correction or the reversal up off that low, and we put out a report on Wednesday pointing out just how that was happening. And the risk then is just the lows of the last week. So you got really, really tight stops. We are still in that seasonally favorable period that carries you from December through January, February. And ideally, this is the point where silver would outpace gold, so we'll see how that unfolds. But this has been just the right type of correction. The miners are participating well. They had trouble in the final stages in that first week of January, so it was normal to have a pause. But at this point, the miners are participating with the bullion, so we've got a chance for a nice run. And the other precious metal we don't talk about very much is platinum, which has got a really nice rounding bottom in there, and it had a great last 2 days of the week, so it could be ready for its run. There's only a couple of platinum plays that are out there in terms of stocks, but they're looking good right now as well.
Is there anything happening in the crude market right now?
It made this push into the $52 to $54 range, and it's spent the better part of a week or so just really doing nothing. You can't read too much into it. The best thing that I think we'd want to see still is a correction into the mid 40s. Whether it's lower than that is still questionable. But we've come from 76 down to 42 and bounced to 55. It's for me, if this is going to be a base that's happening down here, I'd rather see it spend more time forming that base before it really, really comes to life.
The TSX had about a 2-week solid run. Do we expect that to continue?
Well, we put out a piece on the TSX probably about 2 weeks ago now. And what you end up with normally on the TSX is that when it creates a big oversold condition, such as we saw in January, and this is, we'll go back now decades, back into the 1980s and come forward. The type of sell-off that happened there, this is the fourth type of that style. And each one of those then rallied for 2 to 3 months back to its 20-month moving average. And the TSX has had a great move off the low. We bottomed to at 13,800. We're at 15,400, testing now the mid-November highs. But we're only about 100 points away from where the 20-month moving average would be for resistance. And the track record on this would be that you have trouble here, you roll over, and in two of the examples, it went to new lows. The other example in there, it just became a retest. So I think that the TSX has got just a shade more to run, but if it takes out the Wednesday lows that we had in this last week, which was a very, very small correction, if it takes that out, clearly it will be doing a rollover, and implications would be that if Canada's rolling, maybe it's because maybe the commodities are rolling, maybe the oil is having some trouble, but we'll monitor each one of them on their own.
Ross, if anybody had questions for you, how can they get a hold of you?
Well, they can get a hold of me at Ross Clark at chartsandmarkets.com, and we'll have an update on silver available this weekend for anyone who might want to take a look at some of the research.
Ross, thanks a lot for chatting with us.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, the real estate timing newsletter publisher Robert Campbell, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Allan Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Allan's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at allanresources.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Robert Campbell, publisher of the Campbell Real Estate Timing Letter. Online, you can find him at realestatetiming.com. He's speaking to us from the glorious city of San Diego. Bob, welcome back to This Week in Money.
Thank you very much, my friend.
Bob, we'll get into real estate in a second, but first let's talk about what's going on in the markets. The U.S. stock market just saw a 20% drop. Is this likely a correction? And then is it going to become a bull market again, or the start of a bitter bear market?
I would say odds are 70% that a bear market's looming.
And what should we do about that, or investors be doing right now if that's the case?
Well, if that's the case, I mean, that nobody's got a gun to anybody's head. You can always, you can get out of the way of a bad market. You do have control to do that. Cash and go to some alternative investment, which, I felt is the best way. I felt that, relative to the stock market, the best alternative investment for the next 5 years is going to be gold and silver, because that runs counter to the stock market. And I think what's going on in the world nowadays, Jim, with the social unrest, the anger, the distrust in the political process, I think that's going to do nothing but drive confidence out of the system. And I think that where people are going to go for perceived safety is gold and silver, specifically gold. Like my friend Richard Russell used to say, he said, there's no fever like gold fever, so you want to be early. So I see that coming. I think people are losing confidence in our political leaders. I know that's the case here in the United States. I mean, look at these guys. These guys won't even talk to each other.
President Trump said that he thought the trade talks with China were going well, but Wilbur Ross just said the U.S. and China talks are miles and miles apart. What's the real state of things there, do you think?
Well, you know, I know they're miles apart. I don't know what the real state of things. I just gave a seminar last week up in San Francisco, and I met a young Chinese guy that was born there, 40 years old. And he owns $2 million worth of real estate in China, and he wants to get it out and take it to the United States because he thinks it's a safer place. And I said, you know, people ask me about China, and I said, I don't know. I don't trust any of the numbers that come out of China, Jim. And you know what he told me? He said, you're smart, because I don't trust them either. Like their GDP growth. He goes, that stuff's so ginned up, you can't believe it. So I don't know what to trust about China. I know their stock market's very depressed. It's down 40 to 50%. But the real estate market is still kind of hanging in there. You know, Chinese people put their money in real estate, even whether it's in China or the United States, Jim. Do you know that? They like real estate. They like real estate better than securities.
Yes, one question we always ask, if the economy in China takes a downturn, will the people who own real estate in Vancouver or San Francisco or San Diego sell it to cover their losses? Bob, what would your answer be to that?
Probably. I mean, if it came down to survival, Jim, you know, the strong survive. You know, when you get in a bad place, you don't sell what you want to, you sell what you have to. So if they've got something else riding on that, of course they're going to sell that, you know, to get out of it. That's why when you talk about correlations in market and they go, oh, gold and the stock market are, you know, have a high inverse correlation, which they may do over time. In a panic, if things get real bad, thing goes down. All correlations go out the window. Isn't that kind of interesting? I mean, people don't think rationally at that point. They just panic and get out of what they have to get out of.
Well, the real estate people I've talked to in Vancouver say once a foreign buyer has bought land in Vancouver, even if prices go down in Vancouver, they tend to hold on because they're thinking long term, not short term. That is, you know,
that's what they. Oh, isn't it? That's the classic line out of the real estate industry. You know, don't think short term, think long term. In other words, it's always a good time to buy. What they tell you, because think long term. Does real estate go up in the long term? Yes. Buy. Should you ever sell? No. I mean, that's the industry, and that's in the stock market too. You know, when the stock market, U.S. stock market went down 20%, they said, well, investors should think long term, not short term. You know how a 20% decline in 6 weeks feels in your portfolio? Do you think you're feeling real happy? See, that's one thing the buy and holders don't factor into their models, Jim. They don't factor human nature. That people get the wit scared out of them when things start going down, and most of them tend to panic often at the very worst time.
What do you see ahead for the U.S. dollar?
That's a terrific question, and I could build a case for both scenarios. I can build a case for, at least in the short term, the U.S. dollar could go up and up and up. It seems like just at an ever continuing pace that Europe's getting closer and closer to collapse. You know, I mean, boy, are they getting desperate over there. So if the euro went down, the money's going to come into the United States. It's going to flee to the United States, which supports the U.S. dollar and the stock market. But also, I could see another strong case that for example, the looming pension crisis. I mean, we're like almost $6.5 trillion underfunded here in the United States, and during the next 5 years. And if they run out of money, the way I figured it is that that there's 127 million adult workers in the U.S. We all have to cough up $50,000 each to cover the shortfall. or they could cut benefits by 40%, or they could just take the $7 trillion and add it onto the national debt, monetize it, and the national debt would be $29 trillion as opposed to $22 trillion. And at some point, if that's the solution, people are going to lose total confidence in the U.S. dollar, abandon it, it's going to crash, and that makes the case for gold and silver.
Bob, where would they go if they're not using U.S. dollars?
You have to use U.S. dollars because there's so much, there's too much money. It can't go anywhere else. I mean, it can't go into the yuan. I mean, the yuan's just not a big enough currency yet to support it, or a big enough bond market to support it. So it has to go into the U.S. dollar for now.
Is the Fed likely to hike rates higher this year?
Yes, I believe yes they are. And if they don't, oh my God, if they don't, and they don't keep hiking, that's why the pension market is $7 trillion short, because the pension funds have to go into bonds by law, get the return, and the returns have been abnormally low since 2009, since QE. And so they're short. They're not earning, 6% on their bonds. They're earning 3%. And that difference is making a huge difference in how much money these funds have to pay out. So I think they have to. I think they have to keep raising rates. They have to do it. I don't know if you remember. Do you remember Paul Volcker when Volcker was running the Fed back in the 1980s? How he how he saved the U.S. dollar? He raised rates from the mortgage rates went up to 18%, but he had to keep raising rates to save the dollar. This situation, he may look at it and say, the Fed we got to raise rates to save the pension industry. Otherwise, we're going to have to monetize that difference. I mean, and that could have painful consequences too, because when people lose confidence in the dollar, then it's all over. People don't want the currency. What do they want? They want any other currency. They want real estate. They want gold or whatever. Then you get to see high prices, high inflation.
We hear other countries are selling U.S. bonds. Is this causing any pressure on mortgage rates?
Not really, because they don't have that many. China's down to $1 trillion or less than $1 trillion. Russia's already got rid of all its bonds. It's selling all its bonds and bought gold with it. So I don't really think so at this point. Those guys are all light on it. I know a lot of the people in the headlines like to get hysterical, when China dumps its $7 trillion. I mean, it's $1 trillion worth of bonds. U.S. interest rates could soar. If China did that, the Fed would buy the whole thing. You wouldn't even know it happened.
China, Russia, and India have been buying gold like crazy the last 5 or 6 years, where the UK and Canada sold off all their gold. Who's doing the right thing?
China and Russia, because what we're going to face is to save the world, to save the economy, to save the U.S. dollar, to save the debt. They're going to have to revalue gold to a big number. And make the dollar convertible into gold to save it. Otherwise, people won't want it, and that'll be a real crisis like we've never seen. Crisis in the U.S. dollar. I mean, you see interest rates soar, because nobody would want it. They know you guys are just going to get paid back with highly inflated printed money. We don't want to get see that train build up too much speed.
Well, higher interest rates certainly would encourage more saving, wouldn't it? So we don't have to rely on the government?
Oh, sure. I mean, like CDs. I mean, a couple of years ago, on a 1-year CD, you could get 0.5%. Today, you can get 2.5%. That's a big difference. I mean, you should be able to get 5 or 6. So if you got $1 million in the bank, $1 million worth of capital, Jim, I mean, which is way more than most people have, and you can roll CDs at 5%, at least you can make, $50,000 a year. You can live on $50,000 a year. I mean, but you can't live on 1/5 of that. You can't live on, 13,000. You got $1 million, you're making $800 in monthly income. That's nothing. So you got to save the savers too. See, and that's another thing. As interest rates go up, people are going to be coming out of these overpriced assets like income property, like cash flow property. So if you can get, 4% on a CD and you're getting 4% cash flow out of your rental property in California and the price is going down, you're going, why the hell am I in this? And you're going to get out, which is going to put downward pressure. So in other words, that's going to eliminate, things like stocks and real estate, for the production of income because you can get a CD at a reasonable rate of return.
We'll have more with Robert Campbell when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Robert Campbell. Robert, is credit tougher to get now in the U.S.?
I don't think so. I mean, they quit. The standards haven't been loose like they were during the bubble, but they're certainly not tight. I mean, we're back to the old standard where you need to qualify. You need income. You need good credit. And they still get the limits, to buy a house are still pushed too high for what they used to be. But it's not easy and it's not hard.
Are you getting or close to getting any sell signals for real estate in the U.S.?
Yep, I got it for San Francisco 4 months ago. The city, not the Bay Area, the actual city. Housing prices went in 6 years, housing prices tripled, Jim. Tripled. They went from the median price went from $600,000 per home, 1.8 in 6 years. That's a parabolic rise, and I called the peak just based on the 5 key indicators that I use. Sales are down, inventory's up, building permits are falling, and notices of default are just flat. In other words, people are going to start walking away from properties now because they owe more than they're worth.
Adjusted for inflation, how overvalued is real estate?
Well, let's put it this way. Here in the United States, since the peak in 2006, adjusted for inflation, U.S. housing prices are still, I think it's 10 to 15% below the peak, which of course is the acid test for money. In other words, if you bought a piece of property in 2006 and sold it today for the same price you sold it at, the purchasing power, 12 years later, the purchasing power of the money you received would buy 15% less goods and services. So you lost.
Is the new governor of California likely to be good for the state economy and real estate?
I don't think so. He's a total socialist, Jim. He wants to tax the rich. He wants to give away, he wants to tax, what he wants to turn this country, the state into, is a socialist paradise. Is that good for real estate prices? No. Good for real estate prices. Because the people that are making, the rich people own that, they want to take from the rich people. So no, it would not be good, that direction. They might even start putting up things like supplemental property taxes, on properties, to cover, shortfalls, pension shortfalls, or medical services for the illegal. God only knows what they're going to do.
Well, in BC, they've already done that. Any home over $3 million is getting a special tax. They call it a speculation tax if you have a second home in BC. And Jim, there's a special tax for that.
You and your wife live at home, right?
Yeah.
How many bedrooms in it?
2.
Yeah, they could move an illegal family in with you. Why do you need that extra bedroom?
It's my office.
Tough luck. But I mean, that's the kind of thinking. Like, you know, do you really need $1 million home, Bob? Why don't you sell your $1 million home and move to Phoenix and buy a $500,000 home and give that extra money to an illegal? I mean, that's the mentality. That's crazy. That's going to do nothing but crash the economy. Because you know what rich people will do? They'll leave. They won't participate in that. They'll leave.
Yeah, money's pretty liquid, isn't it?
Yeah, they'll leave. They'll go. I'm not doing this. I've got my 5 million, 10 million, whatever. I'm just gonna pack tent and leave. Close the plant down. Then they start tracking you down. Like that's what they do in California. If you made your money in California and you move somewhere else, they still want their ounce of flesh out of you. I kind of really wonder how this is all going to turn out. This whole socialist movement, you know, that Cortez lady. I mean, I think she's going to ruin the Democrats. The Democrats are kind of crazy anyway, and I think they're just kind of going, oh my God, this woman is really crazy. You know, she wants Medicare for everyone. That only costs $32 trillion. We only live in a $20 trillion economy. How's that going to work out? Does anybody even run these numbers?
We'll have more with Robert Campbell right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're chatting with Robert Campbell in San Diego. Robert, is the border wall bullish for the price of California real estate?
Not really. I don't think so. I mean, it may create a few jobs. From what I understand, we already have a wall down here. So most of that, the actual construction of the wall, I think very little's left to be built. But what you're saying, would that be good for real estate and the economy by keeping the illegals out? It probably would, because most of these illegals coming in, they're not working to a large degree. They show up over here and they're a tax liability, Jim. There's a lot of women and children show up and they go straight to the welfare rolls. And all we do is support them. We can do that. Oh, I mean, I think we'd be more prosperous as a country, and the way it's going, you never know how this is going to turn out. All these young people living at home, these millennials living at home, if we kick the illegals out or make them get illegal, they have to be legal to be here in the United States. Some of these jobs they do, like, San Diego, a lot of landscaping jobs and other type of fix-it jobs, that'd be good jobs for these young kids, to do, because these young kids are doing things like this that those guys that work construction and do that kind of thing, those kids could start taking over those jobs. And those tend to be higher paying jobs.
Is the U.S. likely to see civil unrest leading up to the 2020 election, and could it affect the markets?
Yes. Social unrest. Social unrest is rising. I mean, and you just don't know when all of a sudden something's going to set this stuff off, where everybody, let's say the economy goes into recession. In recession this year, and all of a sudden we're in recession for a year, and everybody's hurting financially, and the hatred between the left and the right just grows bigger and bigger. I mean, you can start seeing bloodshed, Jim. It's already close to it. I'm surprised we haven't had any so far.
When housing bubbles burst, does the low end of the market drop less percentage-wise than the high end?
Tends to drop more. Interesting, it tends to drop more. That's what's happened the last 20 years, at least here in California, 20, 30 years in California and part of the United States. Most people think that the low end rises more during the boom and it crashes more during the bust. And in contrast, the expensive end of the market, the high end, that has a smaller rise and a smaller fall. It's kind of just the opposite that you would think, huh?
If we see a collapse in the price of global real estate, where would the most beautiful and safe places be to live?
Well, I'm here in Southern California, San Diego, where the climate's maybe the best in the United States. That Mediterranean climate, it's very rare. I think a good place to go, where real estate is cheap and the weather's terrific. How about the coast of Italy or Greece? You could go buy a Greek island. You know, you could leave California. I could sell my home in San Diego and go to Greece and probably buy a beachfront lot right on this Mediterranean Sea for the same amount of money because everything's so depressed. And I think those are safe democracies.
Bob, you held a seminar last week. How was it, and what did people learn?
What I taught them to do was this. I taught them how to use all the indicators that I use to time the real estate market. I told them everything that I know. And because I told them, I said, it's really important to be self-reliant in this world. And, of course, I was up in San Francisco, which is the hotbed for the biggest, the biggest housing bubble that we've, in the United States right now, the city. And I told people, I said, look, my timing indicators got you into the market in 2012, and now it's taken you out of the market in 2018, 6 years later, and you've tripled your money. Don't be greedy. Take the friggin' profit and thank God he gave it to you, that you made it. So I'm saying, but if any of you guys think that, this is going to keep going up and the price of housing in San Francisco corrects by 50% or anywhere in that range, I said, you're going to be so upset that you didn't take profit, or you may lose everything. Because, real estate's a leveraged asset. You buy a piece of investment property and, at $1.5 million and put $500,000 down with $1 million loan and the price drops to $700,000 for some reason, and you're 300 short on the mortgage loan, guess what? You're on the hook for that. I mean, you have to pay tax on that difference, Jim. That's called mortgage relief, which is by the IRS tax code. That's income. So you owe you owe taxes on $300,000 cash that was really a loss, but they loaned it to you. I mean, so in other words, bad things can happen in a highly, highly overvalued market like San Francisco, and the market goes down.
Did you make any New Year's resolutions?
Yeah, I have a resolution this year that my number one investment is being fit and healthy. And right now, for those that don't know who I am, I'm 71 years old and I have about 12% body fat. I'm 5'11", 180 pounds. 15% body fat. My resolution this year is to get to 12% body fat, because you know what happens at 12% body fat, Jim? You can see your abs.
Good for you.
And the people I tell that to, they go, what a great goal. You know how hard it is? And they go, I know how hard it is. It's hard when you're 30 or 40. But I think, do you remember the name Jack LaLanne?
Yes.
Jack LaLanne?
Sure do.
Oh, that guy had abs when he was 85 years old, Jim. If he can do it, I can do it.
Bob, how can people find out more about your newsletter and your book?
They can go to my website. Website is as follows, realestatetiming.com. No dots or dashes, realestatetiming.com. You can buy my book. You can subscribe to my timing letter. You can read a sample issue of my timing letter. I've got a blog that I'm going to start increasing. I share some thoughts with my followers from time to time that aren't full-time subscribers. but you can get a lot of information there. And it's if you're interested in real estate timing, that's the place to go. I wrote a book that told you exactly how to do it. So no excuses.
Thanks a lot, Bob.
Thank you very much, Jim. Thanks for having me. Always appreciate it and have fun. Thank you.
My guest has been Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter at realestatetiming.com. He was speaking to us from San Diego. Coming up, Allan Mark Angell, next on This Week in Money.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Allan Mark Angell. He's one of the top realtors in Canada. He's sold more than 4,000 properties. That's a small town. He's located in West Vancouver, BC, and online you can find him at theangellgroup.com. That's ANGELL group.com. Allan, welcome back to This Week in Money.
Glad to be there.
Allan, first you have the sales numbers for 2018. How does 2018 compare to your previous years?
The worst of all time. Just a total disaster. I've never seen that in all my years. I've been a realtor since the 70s, and I've never seen anything like this. It's shocking. I'll give you a few numbers you might be interested in. I work out of West Vancouver, but I do the stats for Richmond, West Side, North Vancouver, the Lower Mainland. I do all of them, even though I really don't sell in Richmond. I do some downtown stuff, and North Vancouver, a lot in North Van. Our sales for West Vancouver, the worst since I've been a realtor, is 456. The average is 755, and this year we had 321. So it's absolutely staggering. If you take Vancouver West, their average, my charts go back to 1980s, 84 and around there. So when I say the average sales, that's the sales from the 1980s. The average sales for Vancouver West was 1,749 sales. The worst year in that time was 1,024, and we had 697. Just to show how poor that was, I go back to the 80s. I look at what year was the worst January, the worst February. Then I add up all those, so it's the worst of the worst. Even if you had the worst of the worst in Vancouver West, you get 844 sales, and we had 697. Now, I love the fact that our government always talks about, well, it's affecting the high-end. We'll do them again, the price is down, and we're affecting the high-end market. Well, here's the greater Vancouver. So we're talking everybody, Coquitlam, Port Moody, all the areas there were. The average sales since the 80s is 14,026. The worst year is 9,180 sales, 90, almost 9,200. The worst by month, I said, is 79.19. This year we had 74.94. So again, in the Lower Mainland, we're behind the worst. If you take the worst, the agate months, what they were the worst, we're behind that. So this was a total disaster year. Never seen anything like it in my life. What people need to realize is that the market ended in May of 2016. So this May, that's our third year of having a bad market. But Nobody was aware, unless you did your stats as I do. And I've spent probably since January 1st 100 hours on stats because I love this business and that's what I do. I have on the TV and I do my stats. You really don't know. So even the board, I remember August 17, the board was saying, oh, the market's great, fine, no problems at all. I think that August 17 was, I think, probably the worst or second worst August of all time. So you don't know what's going on. I truly believe if the government had been told when they got in power that, listen, the market's already over. It's done. It's done. They wouldn't have done all the tax stuff they've done and dropped the market even more. Now, the condo market is nowhere near as bad. It didn't stop the drop. It didn't stop the drop until in the 2017. But they haven't come close to the worst year of all time, but they're well below the average as well. So it's a bad market, but we have these corrections, every 10 years you tend to have. When it goes up, it goes down, and that's it. So the market is horrible. That's where it is. I laughed the other day. I saw the news that they were talking about the housing crisis. I laugh now that they talk after it's been bad for 2 years and 8 months or something. They talk about how bad it is. They're so far behind what's going on, and then they said, well, the prices have dropped 6.5%. If they had dropped 6.5%, we wouldn't be having this conversation. I can tell you this: if your house was worth $4 million in 2016, it's now worth $3 million. If it's worth $8 million, it's worth $6 million. If it's worth $3 million, it's worth $2 million or $3 million. That's 25%. I'm a realtor. I sell houses. I love to do it. Those are the facts. That is what is going on there, and it's not about to change all that much.
Now, of course, the government's going to give credit to its foreign buyers tax for the drop in prices, but is that the factor?
Well, yes, it changed the Chinese. The Chinese buyers have gone from, they were close to 50% of our buyers are now about 18% down. It changed that. The taxes pushed the market down even more. If the government hadn't have interfered, the market would have still dropped. It wouldn't have dropped anywhere near as much, but that was the effect of the Chinese. So the Chinese, we're losing the Chinese market. It's gone down about 18% in the buying section. So yes, it has done that. But what the government failed to do, which is always amazes me, when they came out with all these type of let's do this, let's do that, who did they talk to? They talked to the real estate board. Well, the board are not realtors. They're made up of, they're guys that do the figures there and everything else, but they're good guys. I know them all, but they don't have their pulse on the market. So they're the last people you should talk to. You should find a realtor who knows what they're talking. And to be honest with you, there's only a few that do that because they don't spend hours. I spend 3 hours a day on the stats. So yes, the taxes have affected the market in a great way, but they're attitude, well, let's get the house prices down. We'll help the housing crisis. But what they failed to do, they should have talked to the banks. The banks have compensated for that by making it just about impossible to get a mortgage on your house. In West Vancouver, if you don't have 50% down, you're not buying a house. If any person that's bought a house last 2.5 years with 25% down, it's gone. You have no equity left in your home at all. The government had talked to the bank, and the bank says, we're going to change the policies, we're going to make it harder. The government didn't have to do a damn thing. The market would have still have adjusted. But the homeowners wouldn't have lost as much money as they have now.
So, in other words, the government cost the equity in your home,
Absolutely.
Which a lot of people were counting on for their retirement.
Not only retirement. I live in West Vancouver. Most of my friends are fairly well-to-do. I golf at Campbell Golf Club, and there's 56 guys in our group. We golf Tuesday, Wednesday, Saturdays, and there's about 24 that golf all the time. And they were going to be the next buyers. By buyers, I mean, they all talk, well, I've got a lot of equity in my home now. I've had it for years. I bought it for $2 million. Now it's worth $7 million. I'll give a couple of $1 million to my grandkids for them to buy a house. And so I thought, okay, that's great. That could help them out because let's face it, you can't save enough money today to buy a house. So those older clients that have the money, the plan was let's give it to the kids and get them in the marketplace. Now that equity is gone. They can't give it, so we lost that market. The government took those grandkid market away in the wealthy areas like West Vancouver or West Side. That's gone. I thought that they were going to be a new market. No, they're not. They can't give the $2 or $3 million now because the government's reduced the house so much. So that was a terrible plan. But the sad part is, it's not we keep talking about the expensive houses. That's not the issue, Jim. That's not the issue at all. It's affecting every homeowner out there. Everybody. Not the high end. The high end aren't selling. They're going to wait until the market comes back. We're not affecting them. Yes, the price has gone $2 or $3 million down, but they don't have to sell. We're doing in West Vancouver, we sold 13 houses last year over $7 million. 321 sales, 13 more over 7. Because back in 2016, if you bought a lot in West Vancouver ahead of you, you were paying $4 million and up. I was selling lots in the Ambleside Dunn Ray for $4 million to $4.5 million. I sold the properties for $7 million. They're both a great view. But now those lots are now down to 3. The $7 million is down to 5. And but they're going to wait, and they'll wait. They're not dropping the prices as much as they should. They don't. So many are Chinese and the Persian market as well. They have enough money behind them that they're not selling. They won't drop the price to make it sell. So who's being affected? The middle of the road guy. It's always, the government always says we're going to do this, but always the average Joe that's affected. And when we talk about taxes, I'll prove my point at that stage because it's shocking.
We'll have more with Allan, Mark Angell right after this.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Allan, Mark Angell. Allan, the BC government just implemented a speculation tax they say is aimed at foreign owners of real estate as well as people from outside of BC. But it's also a negative billing option as well. So if somebody forgets to fill out a form, they're going to end up accidentally paying this tax. Do you think that was deliberate on the government's part to make it negative billing?
Well, the problem we have with the government, they're either stupid or they're very smart. They're just trying to find a way to collect taxes. Now, the speculation tax, the people buy the extra houses, they rent them out. They're good at some people. You and I, who have been around here a long time, I may buy a cottage in Kelowna. I don't want to rent the place out. That's my home. You know, that is my home. I don't want to go there. I don't rent my place out. I don't want people staying there, so I don't do that. The Chinese love to rent. They rent the houses out. That's what they do. They buy the dumps and rent them out and keep them. So really, it's affecting the average person who's lived here a long time. They're the ones being affected because why should I have to rent my cottage out in Kelowna? Why should I have to do that? I mean, I don't want strangers staying in my place. So they talk about it's hurting the foreign buyer, but the foreign buyers don't, they buy for investment. We're Canadians, we buy to live at our home. The Chinese they love real estate to buy, but they'll just rent the houses. They'll rent the houses out. So, I mean, it really hurts us more. It hurts the people who live here for a long time more than anybody else's house. But the government never thinks it through. It's just a grab of money, that's all it is, but they try and find a reason to justify what they're trying to do.
How is the high-end home market reacting to the speculation tax?
Well, the high-end, I mean, they're all complaining because they're going to pay a lot more taxes. But as I said, they'll rent the house out. It isn't really the high-end. The high-end's only 4% of our market. So we talk so much about the high-end, but that's all it is. It's not a great percentage of our market. It's the normal people that are affected. The high-end, they'll find ways to justify this, and they have the money to pay. The people, the average person, middle of the road, they're the ones who are hurt the most.
With increased interest rates and additional taxes, do more people need to sell their high-end homes?
Well, again, as I said, the high-end won't sell. When you have if you take Vancouver West, it's 5%. Over 7 million is just under 5%. West Vancouver is 4%. But you look at Vancouver West, over 7 million. You've had one sale since November the 1st. November, December, you've had one sale. So who cares about that? Westbound's had 3 over 7 million. So it's such a small percentage, they're not putting it on and giving their houses away. They're just refusing to do it. They'll wait out the market until this government's out, and then it'll take a little bit longer, and then they'll get it back then.
Do you expect high-end inventory to continue to increase in this year?
Yes, we're at Westbound's at 84 over 7 million, and I say 7 million because the lots are all worth 4 or more. Vancouver West is at 89, and but they will go up to 125 in a matter of months.
If sales increase this year, would prices also increase?
Not a hope. Prices, there's not a chance. The prices have no chance to increase. If any realtor or any government tells you that, there's no hope in hell. This government, until it's gone, and then we need some time out there. We got probably 3 years. If you're thinking of selling, you're going to get more money today than you are the next 2 or 3 years. My feeling is, yes, we'll have more. Last year was so bad. We had record lows. Every month was the worst. January, worst February in history. But the last 5 months in West Van, the last 4 in Vancouver West, they weren't the worst. So they're the second worst, but it shows the feeling is changing. Now the world knows it has changed. The attitude's starting to change a bit. Okay, the market isn't at the bottom, but it's getting close. So we'll have a few more buyers out there saying, okay, well, maybe I do this weekend. And both have the same attitude. We think it's a good time to buy because the market's still going to go down a bit more, but there's good deals popping up now. It's a time to look. We didn't have that last year. Everybody was sat back. They didn't know what was going on. They didn't know the truth. And so I think sales will increase slightly, but prices, there's not a chance.
Is the constriction of credit likely to have a greater effect on prices than increasing taxes?
Absolutely, because that's what's caused it. The government putting in trying to control what's going on, but the banks, the restrictions that the bank have now, it's insane, absolutely insane. They're both, one's as bad as the other. So the taxes are going to affect people for sure, but trying to buy a house, try and qualify. It's just impossible.
The 3 biggest banks in Canada now have lowered their 5-year mortgage rate. Is that going to make any difference, or is it still just too hard to qualify for those rates?
It's too hard to qualify. It'll help stabilize a bit. What that will do, it'll stop. Apartments are going to fall a bit longer than houses. Houses, I think, in the next few months should be close to the bottom. Apartments didn't start till the year after after the houses started to fall. So it'll be, but all that will do, it'll help stabilize, give us a little more confidence in the market, so we'll feel a bit better about buying a house.
So in other words, people shouldn't expect prices to fall much further than they have right now?
Well, they're going to, see, the trouble with saying that, so many of the houses are so much overpriced. Yeah, if your house is worth $3 million today, it's probably going to go down to 2.6 in that range, I would think. But most houses that are worth 3 are asking 3.7 or 8. So you're going to see they're going to say, well, they dropped $1 million, but they weren't worth that much money. So yes, if you price the house right, then you have a chance to sell it. I put an apartment on the other day, and the first person they made an offer on it. There was some other apartment came on, there were 4 offers on it. So they're getting priced. If they price well, they will sell. But most people, the realtors get the stats from the board. And one of the issues, like January sales, February the 1st, the board puts out, here's the sales for January. Well, let's look at the facts. Every deal is subject for 10 days to 2 weeks. So any deal written January the 20th and on isn't reported because they don't become firm till February 2nd, 3rd, or 4th, you see. So you don't really get the exact. I analyze every single one. Every one of my stats the other day. I had to go back to March in a couple of areas to change the there was collapse of sales. I go through it and update it. You need to know what's going on. I analyze every sale that comes through, how it affects the market. And so that's the time you have to spend to know. But as I said, it's a lot of work for a realtor right now, but most realtors are afraid to tell the person the truth. Even if they know the real facts, you go in there and Mr. Smith and say, listen, your house is $2 million overpriced. Well, that's the case, I'll take it off the market. So they don't want it off the market, so they're afraid to tell the truth. And probably they don't know the exact facts.
Does that mean some high-end homes are still being listed for sale with 2016 prices?
Oh, absolutely. They're still there because, see, you got to realize, one of the worst things we have, well, listen, Alan, I don't care about, I know what you're saying, that's probably true, but you know what? Mine's a special house. If I get this price, I'll sell it. If not, it won't sell. So you take the house. Most realtors take the house. I am now on a stage where I don't want these overpriced listings, but they'll take them just so they have something to advertise, so their name is out there. And once you take it, then they go, oh, well, it can't be all that bad. He wouldn't have taken the house $1.5 million over what he said was worth if he thought it didn't have a chance to sell. But most realtors will take it. You think there were 321 houses, so there was over 800 realtors in West Vancouver. So if I get a chance to list a house, I'll take it. A miracle might happen if somebody wants it because, yes, you're overpaying today. But if I'm going to live there 10 or 15 years, who cares? It's going to go up or down twice in that stage. So there's no reason. If this is a special house, your wife has to have it. Now is a great time to buy it because it's not going to drop that much more, and you're fine. So buy it. If you're going to sell next year, you're not buying it. But the real buyers, they get lost up in the fact, oh, the market's doing this and that, I better not buy. They all want the bottom of the market. But when the bottom of the market hits, try and find a house you actually like. The one you like just sold 2 months ago, and maybe 200,000 more, but you've lived there for years, you wouldn't have cared. People don't think it through properly.
Do sellers of high-end properties have to drop their prices below the latest assessment to find buyers?
No, here's the topic that I absolutely love. Let's talk about tax assessments, okay? No, the high-end houses are not dropping below the tax assessment. The high-end houses are selling still 60% of them, 62% are selling above tax assessment. 62%. Now, if you go under $4 million, 79% are selling below tax assessment. 79% below tax. I looked in the British properties I did appraisal the other day, and I looked out there, I think there were 22 houses under 3.6 million. Every single one so below tax assessment. So who's really affected by the government strategy? The high end is still only 38% is selling below assessment. Some of them are $2 or $3 million over the assessment still being sold. But if you have a normal house, you've got a 79% chance that yours is going to sell. Yours is going to sell below tax assessment. The house that I appraised, she bought it for $1,085,000 and $215,000. And her tax assessment was $2,038,000. So that house should be selling at about $1,900,000. But so that's back to 250 prices. But that house went up to about 2.5 or 6. She remortgaged the house. She now owes more than what the house is worth. So the people that the $2-3 million, they're the ones that have been affected the most. Your house is going to sell below tax assessment. If you're in an $8 million house, your house may sell $1 million, $1.5 million above tax assessment. So again, it's the middle of the road that's been affected by everything, these tax assessments. That drives me nuts.
We'll have more with Allan Mark Angell when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp, RMO on the TSX Venture Exchange. Rainy Mountain Royalty Corp is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with Allan Mark Angell. Allan, does the Vancouver real estate collapse of the early 80s show any similarities to the downturn we're experiencing right now?
No, they're going to say it does, but no, it doesn't. Back in the 80s, the reason we had the collapse, the rates went up to 18-20%. So of course, even the wealthy people didn't, if they had a mortgage, like all the Chinese buyers now, they get a mortgage, they get a 50% mortgage because they want to establish credit in Canada, and but our rates have jumped up a bit, but they're nowhere near. Years ago, I never thought we would see interest rates below 10%. But back in the 80s, we didn't have the Chinese that we have now. We didn't have the wealthy Iranians that we have now. So there's a lot more money in Canada right now, like Vancouver, like Toronto and that. There's a lot more money here who can afford to sit and wait. So it's not anywhere near what it was in 1980. A lot of the wealthy people had to sell then. You don't have that now, but you're only doing one sale a month over 7 million, got 100 something to choose from. These guys don't have to sell. So it's a totally different market than the 80s.
What percentage of properties in West Vancouver are foreign owned?
Well, there's no way of knowing that without checking, but the last 5 years, the Chinese have been buying about 49% of the houses. Now they were down to 31. But I mean, the Persians are 20-some%. So, I mean, probably Caucasians are probably 35, 37% of the market, and the rest is split between the Persians and the Chinese.
China's economy is slowing down. Is that causing any foreign owners from China to sell their properties to cover their losses?
It doesn't appear that way at all, because as I said, when they're only selling their houses all worth $7 million and up, and they're not dropping the prices to get them sold, so they don't seem to be concerned. No, it's affected us because we don't have the new Chinese buyers who are coming in the country. They used to come in, by plane loads. Now they're not coming anymore, so that's affected the market. But remember, what the government's done to the Chinese affected the housing market. The average owners, that's the ones that have been hurt the most. They're not buying our houses now for the big prices.
Is it getting tougher to get mortgages for high-end homes?
Well, yeah, they have more money, so they probably have 50% down. But if you need to qualify as close, you won't get a mortgage. But as I said, it's everybody. I worry more about the $2.5 million home, the 3.5, because they've had to borrow from the family to get the money, and their incomes have to be so high now. It's just, you could be two doctors that have trouble qualifying for a mortgage now.
Are foreclosures likely to increase on high-end homes?
Probably. There's a few, they look like they were going to go up last year, but there really hasn't been a big increase in foreclosures. Because I said the ones that own them have the money behind them.
Any thoughts on how long it could take to get the high-end market to hit bottom?
Well, the high-end market will probably hit bottom by the fall, I would guess. I think the housing market will probably hit bottom. But as I said, this is my best guess. But there are good deals around now. So really, in the month that's going to drop the next few months, it's not going to drop another 15%. My guess is going to be 6-7% more, and that's probably it. But some of them are already there, so those houses you should be buying because, as I said, if you wanted to suit your family, there's no guarantee you could buy when the market hits the bottom. I mean, you don't know for sure. The stats will help you, but nobody knows for sure, this month we hit the bottom. I knew when the market was over in May of 16, simply because I do all my sales from my West Van, like 1984, Vancouver was 1989. I take the average sale. So every month from like 16 January, February, March, and April, they were way above the average. Way above. 150 average was, half that. It was just insane. We got to May, we had 86 sales in West Vancouver. Vancouver West was just about the same. There were 6, and that was only 6 sales above the average. Every month since that, from June on 16, every month has been way below the average. So I knew right then the market's over. That's how you tell it happens. So, and it'll be the same thing with this. When all of a sudden we get sales that go up to the average or above, we know the market has hit bottom.
If people buy now, are they at risk of trying to catch a falling knife?
Well, hopefully they're smart enough to know what the house is actually worth. The realtor they're used will hopefully now, every realtor is now aware that the market is bad. Now, even now they're all aware that maybe it's as bad as worse than he has actually thought. If your realtor's good, they'll tell them. I mean, the biggest deal I ever did in West Vancouver was just under $30 million. And I had a call from the owner after he bought it 2 weeks and asked me how much is it worth. And that was the toughest question I ever had in my life. The guy bought it for just under 30. I told him it was worth 22. Now that was tough. He said, "You mean I paid by just about $8 million?" Yes, but he laughed. He said, "Well, the bank just appraised at 22.5." So that's the type. But the man didn't, he was very wealthy. He just wanted the house, and the guy wouldn't give it the price that, So he bought the place. But I can tell you, when I was asked that question, do I justify the price he paid, or I tell the guy the truth? And that's tough. But if you want your client, you got to tell them the facts about the market. What bothers me most about this market, and the reason I never used to tell anybody my stats. I started in the 70s. I started so badly, so by 1980 I was a top real estate because I had my stats. I used them. I didn't want anybody to know the truth about the market or what I was actually doing. So the market changed in 81 and crashed in 81. I'd been the top real in 1980. By March of 1981, I was third in my office at 22. I thought it was a fluke. I got to that point. I changed my tactics in selling, and I was number one again at the end of the year. But what bothers me is that because you don't hear it on the press, now they're telling us it's 2 years and 8 months late. They don't know the bank. The government doesn't know the stats, or they don't care. So the amount of people that have turned down offers on the house in the last year and a half. They've turned down offers at $8 million. They finally sold it for $6 million. They've turned down offers at $3 million, sold it for $2 million. The amount of money that's been left on the table because the average person was not aware of the truth about the market. That's what bothers me. The money we lost because we did. I mean, I'm an example. I'm no better than anybody else. I knew this market was going to change. A couple of years ago, I had an offer on my house, but I didn't want to sell it. My wife said me shit. She wanted to move into an apartment. I had 2 offers on my house, and I said, I'm going to regret this, but I love my house. Well, sure. My house has dropped so much money, it's scary. But the fact of the matter is, I love my house. I'm happy here. And that's why I stay here. But I knew it was going to happen. So no matter how smart you are, life's more important than just doing what's the best financial step every time you do it.
If people price their property to the market, are they likely to get a sale?
Yes, except perhaps in the high end because there's so few buyers in the $7, $8, $9 million. But if you price your house well in the 2s, 3s, and 4s, you should have a sale. But one of the mistakes the realtor, the sellers make, I'm going to have 4 realtors in. So every realtor wants it, especially you want the listing on your house because you got to hope it sells to make a living. When you have 321 sales for over 800 realtors, you want product. So the more realtors you have, and the price goes up and up and up, and now you're too high, and so now it costs you money because you have done that, and that's the biggest drawback. The best example I can give you, I went into a house. The woman she's going to say, I'm going to have 10 agents in. And I said, 10 realtors, are they crazy? They're going to be so overpriced, it's nuts. And then I walked around the house with the owner of the house, and he wasn't my cup of tea. And I said, I don't even want this guy's house. So I said, look, guys, I'm not your realtor, go. And, and so I left. They had 9 in instead of 10. They called me and says, Mr. Angell, you told us the truth. My husband knows he's a pain in the butt, and you were the only guy that told me he was a pain in the butt. And he also knows you told the truth about what was going on, so he wants you. And I took the house, and we got to be very good friends. So you never know what's going to happen out there. But having a bunch of realtors in, they're going to be too high, and especially on a falling market, it won't sell.
What trends do you see for real estate in this new year?
Well, we're going to have a little more positive approach, even though the first few weeks of, they don't indicate a change. But as I said, they just report the firm deals. There could be, like in West Vancouver, there's only 16 sales out there. I think we had 17 last January. But there could be another 15 sales out there that are subject we're not aware of. We won't know until the middle of February what the actual sales were for January. Not what the board puts out on the 1st of February. We need to wait till the middle of January to get all the subject deals. I think sales are going to increase. We won't have the worst months of all time. It'll be a little bit better than last year, and it's a good time. It's a good time to start to look. Another thing is the other thing that people should realize: most people take their houses off the market in November, December. We get 25, 27% of our houses come off the market in November, December. They don't put them on till, end of February or March. I think springtime's the best market because most people will want to sell their house springtime and move when school's over. But the fact of the matter is, there'll be another 25, 30% product on the market by that time. I love selling houses November, December because there's a lot less product. January's a good time because they don't even think they just got back off holidays for Christmas. They don't think about the house for a month or so. And the buyers that come out this time of year are real buyers. They're only looking in the bad weather, the rain, because they have to buy. I love this time of year. This is the time you should price it sharply. You don't have the competition you're going to have in March, and you have a good chance to sell. Just tell the people, listen, I've got kids, I'm not moving until June.
Allan, how can people find out more about your business, and how can they contact you?
Well, I'm an Angell Hasman. That's in West Vancouver. It's spelled, I'm an Angell with two L's, Angell. Malcolm Hasman is my partner, and Hasman, H-A-S, Man, M-A-N. And my number is easy, 778-888-7474. Please, if you're paying attention to this, you just need, I love to talk to people. My wife says I talk. I'm a chatty Cathy. Call me even if you live in Burnaby or so. I just put an apartment on in Burnaby actually because I'm getting, now there's so few sales. I like to do deals. I kind of go on all over the place. I have a son who works for me, so he does most of the traveling. But you need advice. You need the truth. I can do 10 minutes and check on your area to see how the sales are going, because this is your money. This is your retirement. It's your money. Don't let the government take any more away.
Allan, thanks a lot for chatting with us.
Okay, Jim. Thank you very much yourself.
I've been speaking with Allan Mark Angell. He's located in West Vancouver, BC. His website, theangellgroup.com. That's ANGELL group.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Robert Campbell, and Allan Mark Angell, and thank you for listening. If you have any questions for our guests or for the show, you can send them to info@howstreet.com. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and Naturally Splendid CEO Douglas Mason. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with American Manganese CEO and President Larry Reaugh. Welcome back to the show, Larry.
Well, Jim, it's always a great pleasure to be on the show.
Larry, how did the Metals Investors Forum go at Cambridge House last weekend in Vancouver?
Actually, Jim, I was very surprised. There was a good turnout. There was a lot of people there. We were pretty much busy 24/7 at our booth. That's just a way of speaking, but we were pretty busy, especially on Sunday. We had a lot of people at the booth, and we probably had at least 60% of it as much the following Monday. A lot of people interested, a lot of local people, a lot of people from as far away as Mexico and Europe and other places that gives us a chance to talk to people. But a lot of interest in our project, and I can only say that I was happy with the turnout. The last few shows I've been to, it's been kind of a meaty. It's been basically very quiet shows, and we think that the money was well spent and our time was well spent, and we certainly got a lot more visibility. We had a lot of existing shareholders, a lot of people that were wanting to buy into the shares, and you're starting to see a little bit of that in the market. And that reminds me, we're looking at a great market today. Everything's up. Gold's way up. And commodities are mostly up. And, it's just a great Friday, good way to end the week. But the Cambridge show, I would have to recommend that the audiences keep up, that people attend that show. There's a lot of companies there, and we had a full house at the talk on the company, our presentation. That was, unusual. Usually we're lucky to get half a room full. But we had a full room, and people were lined up outside the show waiting for the other speaker to finish to come in. So again, that was very positive. I see the market being excellent this year, I should say, and we're going to catch the wind in our sails here pretty quickly. Now, speaking of that, we're moving ahead with the getting the power plant reassembled and wiring and ventilation and everything. All these things have to be done, and we hope to be mobile either the end of this month or very early in next month with the pilot plant. So that's looking good. The other thing I'm seeing, Jim, is I'm seeing a lot more positives on, they're talking about recycling. People will remember that a couple of months ago, and I've said this in the podcast before, a couple of months ago, everything they said about recycling was negative. There was no money in it. But nothing could be further from the truth. We believe that we have the lead in the recycling. We certainly do have the process patented, so people will not be able to use that in any process that they try to get patent. So I think that this is a perfect storm coming up for the company, and I couldn't be happier.
Larry, for people new to American Manganese, what are you all about?
Well, Jim, we're a critical metals company. We're in mining, and we developed the process on a very low-grade manganese project. I know people have heard this, but I always expect there will be new listeners. And that process is the cornerstone of our process for lithium-ion batteries. We developed a process that turned, rock into valuable materials, and now we are developed a process where you take a hazardous waste that is hard to deal with and turn that into a valuable metals. We're traded on the the Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. We're traded in Frankfurt under the symbol 2AM. You can reach us at 778-574-4444. You can go to our site where there's a lot of information, including a business plan, and that's AmericanManganeseInc.com. Or you can email me at LREAUGH@AMYMN.com.
Larry, thanks a lot for the update.
You're welcome, Jim.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on January 25th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Doug Mason, CEO and a director of Naturally Splendid. Welcome back to the show, Doug.
Thank you very much, Jim. A pleasure to be on.
Doug, where is the company at and where is it headed?
Well, historically, the company had great success in international exports for hemp seed oil and hemp seeds, and we have repositioned the company since that market imploded due to foreign intrusion of lower priced and lower quality goods. So the company scrambled to reposition itself as a natural food manufacturer and supplier. So we've invested heavily over the last 2 years in research and development of new product lines. I'll speak a little bit about those in a moment. And we've also beefed up substantially our management team and our production team and our experts that are in food processing, food development, and food manufacturing. The most recent significant moves that we've made, through an acquisition that we made late last year, or middle of last year, a company called ProSnack, which is in the business of manufacturing bars and bites. It's a fast-growing segment of the food sector. And we've significantly expanded the production capabilities through capital expenditures on equipment, through investment in quality control and compliance measures to make us a much higher grade of compliance in terms of food manufacturing. We're now SQF2, which is a very high level of quality assurance in food manufacturing, and that's attracted a number of very large international and national players that we're now manufacturing and supplying for, including nationally in Canada, and we've began significant exports to the United States through some of these food service national accounts that we're now manufacturing for. That's an exciting end of our business. We've also built and developed a test kitchen that enables people that want to enter into this business to come in and work with our food scientists and formulate their own products with our assistance and have a proprietary ownership of those products, and then we manufacture for them. So it's a big part of our business is manufacturing for others, and we like that kind of business because it's very clean. You don't have the marketing and slotting fee costs that you have with your own brands. That's an important part of our business as well. But we really like the co-pack business. So we're doing that for some very significant national accounts these days in the bar maker side. Additionally, we added a lot of personnel, including myself, who have been in the capital markets and food manufacturing historically. It's kind of my sweet spot in management. We also added a chief financial officer who's had 25 years of public company accounting and experience to help our financial reporting and compliance. And we've added some really strong people such as Kevin Flanagan as a lead food scientist with over 35 years experience with a broad range of food categories, assisting in product development team and maximizing our facility logistics. Mr. Scott Walker, who has a vast regulatory experience in the medical marijuana and hemp sectors, leveraging over 30 years of experience in business startups, corporate management, government relations, business development. We've recently added a Dr. Lauren Swetlikoff, and he's a leader in the field of naturopathic medicine, and we've developed a whole line that are sold under the trade style of Natura FX, a practitioner comprehensive patient care products, and we're very excited about that and the future for growth and sales for this company. We've added specialists such as Dr. Love. He's a doctor of chiropractic, completing his master's science in human nutrition and functional medicine, and he's heavily involved with the PGA Tour and professional athletes on the medical side. So we have a whole line called Natura Sport that's focused on the athletic and high performance area of the marketplace. We added Mr. Bob Mayer. He's president and founder of Pure Integrated Pharmacy. He's providing special attention directed to the rollout of our Natura FX into the naturopathic clinics with functional medicine practices and pharmacies in Canada. So our real strong focus is on co-packing and manufacturing food products for others, mainly in our bar maker, or it's a renamed company from a company we bought called ProSnack. We now call it the Bar Makers. So it gives us an exciting edge up over a competition that we can allow that formulation in-house and go right to the production cycle and get it out into the marketplace much faster. This is all really focused on a very important part of our future growth, Jim, and that is all about, once legal in Canada, CBD-enhanced products. So we want to be ready with our marketing and distribution programs with our own brands, nationally distributed, but we also are we will be very, very quick to be into the marketplace for ourselves and for others that we're manufacturing for by having listings and manufacturing agreements and processes already in place. So once we are able to legally sell those products in Canada, we're in the process of the application process of getting a processing license, which will allow us to handle and extract and refine the cannabinoids that come out of the hemp plant primarily, which will be focused on hemp. So that's a very, very exciting big bucket of growth for the company's future, Jim.
For people who are new to Naturally Splendid, can you maybe just explain what the company's all about?
Oh, sure. Well, you know, we are a food company that's very focused on good for you products, and we very much enjoy the good feeling that manufacturing and providing foods that are good for you and good for your health. That's really a core focus of the company. We've stayed within those boundaries, and we intend to magnify that as we get more and more information about the wellness features that CBD-infused products can bring to health for Canadians and Americans in our markets that we're currently selling into.
Douglas, how can people get more information about the company, and where are you traded?
Well, we are traded on the venture board, the Toronto Venture Board. We're also traded on NASDAQ under the OTC QB markets. We're also traded in Frankfurt under the symbol 50N. And to find out more information about the company, we have a very, very comprehensive website under naturallysplendid.com, and I invite your listeners to go to that. And there's a good lineup of all the new products that we will be launching, and we have launched recently, and really give you a good comprehensive overview of how extensive the company's product lines are today.
Doug, thank you so much for the update.
It's a great pleasure, Jim. I look forward to talking again soon.
I've been speaking with Naturally Splendid CEO Douglas Mason. I'm Jim Goddard. Our conversation took place on January 25th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.